First of all, I don't think this is the start of anything. It is just a knee jerk reaction to uh, a surprisingly large tariff hike by the US. The hikes on many countries came as a little bit of a surprise. Markets have responded very negatively to that. And in particular, the size of the tariffs imposed on China are going to affect a lot of major US corporations, which have outsourced a lot of their manufacturing to China over the past 30 years. Trump's entire campaign, both in 2016 and in 2024, was focused on changing that. So I think markets perhaps were hoping that President Trump was bluffing. He clearly was not. And I don't think he's going to change anything with regard to China. If anything, what will happen now is that with China retaliating, the US is going to continue to up the ante and increase tariffs on China even more. China, unfortunately, doesn't have really much of a bargaining position because China exports 3 times as much in terms of goods every year to the US as it imports from the US. It imports very little. A 34% tariff on imports from the US will, of course, reduce US exports to China even more. But this is a mug's game because if the US retaliates, China will suffer even more. I think the assumption that this is the beginning of a meltdown in markets is overdone. Markets, I think, will eventually recognize that the US economy is likely to be strengthened. Most trading partners, including the EU, India, Japan, Korea, are continuing to negotiate with the US with the intent of reducing tariffs mutually. China is going to suffer a lot. Canada has got off pretty lightly in this round of tariff hikes. So I don't expect that this is the beginning of something major in terms of a meltdown in markets. Markets often have knee-jerk reactions. It takes a few days, sometimes weeks, for markets to fully digest what a policy is aimed at doing. And I think markets will calm down eventually. The US will not go into recession. So the important thing is that the US has imposed tariffs on most countries. In fact, all its imports will carry a tariff of 10%. But the tariffs on the other countries, including 26% on India, additional 34% on China, 46% on Vietnam, etc., come into effect on April the 9th. Most countries are actually negotiating with the US, including Vietnam. Vietnam understands that it exports far more to the US than it imports from the US, and that needs to change. So if Vietnam offers to import much more from the US, then that bilateral trade surplus that Vietnam runs with the US will shrink, and the US will agree to reduce the tariffs from 46% to somewhat lower. Similarly, India has been negotiating with the US in the run-up to this, and those negotiations may or may not conclude by April the 9th, but I think there is the scope for a mutual reduction in tariffs from the levels that the US has now imposed. And that is the likely outcome. So there is not going to be a recession in the US by any means. In fact, I think that many of these measures will strengthen US manufacturing and strengthen the US economy overall, although there'll be an initial negative impact on inflation. Inflation will go up. Note also that over the last 24 hours, there's been a substantial sell-off in oil prices. That is good for India. It's good for the US. Um, and it's good for inflation numbers in the US in particular. So if the continued sell-off in oil prices continues, especially given that OPEC Plus has agreed to increase the supply of oil in world markets, then the inflationary impact also will be somewhat mitigated. The US is taking on all countries in terms of countries that have bilateral trade surpluses with the US. So the US has deficits with China, Canada, Mexico, India, uh, Korea, Japan. So those are the countries that are being slapped with higher tariffs. And uh, the only country so far that has retaliated is China. The EU, which has been slapped with a tariff of 20%, is negotiating. Uh, Despite the rhetoric, the EU is actually negotiating to reduce its trade barriers to the US. It is negotiating to increase purchases of US defense equipment, US aircraft, and perhaps even some agricultural products. So if they do that and the US responds positively, then it is possible that the tariff of 20% imposed on the EU will decline to perhaps 15%. And similarly, India is continuing the negotiation. So, on your other question, whether India will capture global markets, I think capture is too strong a word. But India will gain market share in the US at the expense of China, Vietnam, Cambodia, Bangladesh, Sri Lanka, Pakistan, all of whom have been slapped with higher tariffs than India. Uh, and in particular, for the likes of Bangladesh, Pakistan, Sri Lanka, Cambodia, Vietnam, they previously were paying almost zero tariffs in the US because they were beneficiaries of the generalized system of preferences that applies to developing countries. The US withdrew India's GSP benefits in the last Trump administration. So India was at a competitive disadvantage. India's textile and garment exports were at a competitive disadvantage relative to those five countries in the past 6 years or so. Now, India's textile and garment exports will have a huge competitive advantage relative to those countries, and also relative to China. And so, India will gain market share in the U.S. quite substantially, and that'll be quite good for India's textile, garment, and other labor-intensive export sectors. There will be no global recession. So, firstly, there will be no US recession, there will be no global recession. This talk of recession is completely overblown. Uh, People talk of recession partly because of the Smoot-Hawley tariffs of 1930. That was an 80% tariff imposed on almost all countries. One of the biggest sufferers from it was Japan then, and Japan responded uh, with Takahashi Korekiyo, the finance minister at the time, coming up with what are now called Keynesian policies. Be that as it may, there was a depression in 1930 because of the size of the US tariffs imposed then and the retaliation by other countries. Now, this time around, the US has imposed differentiated tariffs on different countries. The effective tariff is only 20% on average across all countries. So that is only one fourth the size of the Smoot-Hawley tariffs. Secondly, it's not resulting in a slew of retaliatory tariffs by other countries. Instead, most countries other than China are cutting their tariffs or cutting their non-tariff barriers to accommodate the US. And so there's going to be mutual tariff reductions rather than tariff increases with regard to most countries. China is different. I emphasize that China is a mercantilist economy. It has engaged in massively unfair trade practices for the last 30 years, and it is time somebody puts a stop to it. The whole world needs to thank President Trump for waking up to this. In fact, 5 or 6 years ago, actually 8 years ago now, when he first became president, and uh, the world now needs to take action. The European Union is looking to collaborate with the US in taking anti dumping actions on a collaborative basis against China. India too needs to do the same thing because China dumps, it sells its excess capacity at below the cost of production. That is called dumping. That is the very definition of dumping. The Chinese have been doing it for years, and it depresses world prices of things like steel, aluminium, solar panels, etc. So it is important that the rest of the world take action against China's dumping. And the EU is cooperating with the US in doing that. So I think the initial market reaction is wildly overdone. We do not need to panic along with global markets on the first 2 or 3 days after uh, an aggressive action taken by this administration in the US. This action has been telegraphed by President Trump throughout the last 1 year during the election campaign. But many people thought that perhaps he's not going to act on it fully. He has now acted on it. I don't think he's going to withdraw the action on China. In fact, because China is escalating the conflict, it'll only get worse with China. But other countries are likely to see reduced tariffs if they negotiate in good faith with the US. So, no global recession. Well, Nifty and Sensex have been up and down. They have uh, broadly moved somewhat down today as well. I think that Nifty and Sensex will initially weaken some more, perhaps in the early part of next week. I would look upon that as a very good buying opportunity because a lot of Indian companies are going to benefit from the strengthening of things like the automobile sector in the US. So, for instance, what the US has done is impose 25% tariff on automobiles, but not really on auto components. So, what will happen is that the large American companies, GM, Ford, and Stellantis, what used to be Chrysler, plus some others like Toyota, Hyundai, etc., that have manufacturing plants in the US, are going to ramp up their production. They'll be able to ramp up their production behind these tariff walls. And the ramping up of domestic production in the US will basically mean that they will need more components. So, demand for India's auto component exports will pick up. That's one benefit. Uh, the higher tariffs on China, Vietnam, etc., are going to mean that a lot of uh, smartphone manufacturing will shift from China and Vietnam to India. So Apple and Samsung are going to be ramping up their production in India. Their suppliers will ramp up their production in India, uh, not only for the Indian market, but particularly for exporting into the US market, which is by far the largest market in the world for the value of smartphones imported. So, the importance of the US is that it is the largest importer in the world by a long way. China is a very small importer. China is the world's largest exporter, but it imports much less. And it does this because it has non tariff barriers, not just tariffs, but substantial. That has about 1,500 non tariff barriers that apply to Indian products entering China. So, given that China has these massive non tariff barriers, it is important for the rest of the world to take action to pry open the Chinese market. If China doesn't open its market, then the rest of the world needs to close their markets to Chinese products. Well, the gold price always reacts well to uncertainty in global markets. So we have uncertainty. We also have uh, higher inflation expectations. So those are two factors that contribute to higher gold prices. And gold prices are therefore likely to keep rising over the next week or two. So if I were a holder of gold, I would hold on to it for the next couple of weeks. But in about a couple of weeks' time, I would trim my holdings of gold and switch into equities, which will look a lot cheaper after they have sold off over that period.